We're shifting focus to some of the earnings candidate then, and Chola Investment Finance did come out with the earnings, but what's the way forward? Let's understand from the management itself. Mr. Arul Selvan, who is the CFO of the company, is joining us right now. Hi, Mr. Arun. Thank you so much for your time. First up, I wanted to touch upon your disbursements, because when we see the numbers sequentially, the growth was led by vehicle finance while the other business remained quite muted. Help us understand that what was the reason behind and what were the factors that were at play?
No, actually, the growth in LAP and home loans have been better than vehicle finance from a disbursement perspective. On a sequential basis, it may not look so, because vehicle finance had not grown that aggressively in the past because the industry was not doing great. And consciously, in the case of unsecured, we have been slowing down a bit on the partnership lines of businesses, which is where that impact might be showing up there. Overall, AUM growth is what is critical. AUM growth is still clocking around the 30% number, 28 to 30% number, which is where we are, which is what is the cracks which will bring interest income, as well as the OPEX and other related items are related to the AUM rather than the disbursement, because disbursement changes with regard to the tenor of the product, with regard to the contours of the product, so it will be different. So I would request that it is preferable we keep the focus on the AUM rather than the disbursement per se.
Right. Mr. Selvan, the companies in the past has recorded an AUM growth of about 40%, and now you've guided for 25% AUM growth in FY26. Tell me, what's the reason for such low expectations?
No, always we are given the guidance at around 25% levels, but we sometimes do cross the expectations and do better. But I think these 40% levels had been achieved when we came out of COVID, and there was a comparatively different time scales. Like sometimes some in 1 year it was 9 months versus 12 months, and the next year it was also because we went into newer geographies with regard to the LAP and home loans, which gave a significant AM growth bumper. Also, the case of when we are growing the LAP and HL, which are a longer range products, the AM growth will be sustained because the asset stays on the book for a longer period. And in an EMI-based product, the rundown of such long-range products is small in the initial years, and as it goes into the lag years, you will see the AM sort of plateauing it out. This is what is happening when you see the AM. And I think AM growth of 25% is what we keep in focused upon. If we could do better, yes, but we would certainly like to keep it in the 20 to 25% range.
But segment-wise, Mr. Selvan, help us understand that what's happening within the HCV segment, because from the OEM side, we are not seeing many great numbers panning out, though the replacement is holding quite decent at this point in time. But is there any slowdown that you are also witnessing in this segment, and by when do you expect improvement?
HCV segment is a segment where we participate only when the cost of funds are at tolerable levels for us. HCV segment is a segment more influenced by fleet operators, and their pricing or bargaining power on pricing is much stronger. So we will have to give away on, taking these products at lower yields, which can only be possible when cost of funds are lower. So we consciously bring down the HCV segment's share when cost of funds are higher, which is what we have been doing. Also, it is a reflection of the market that, HCV, the capex has not been so good, and so the segment has not grown by itself. And because of the cost of funds, as I said, we have been doing a little lower volumes in this segment, but that has been compensated by other segments like passenger vehicles, two-wheelers, and used business, which is what we are seeing a good traction right now.
Right. There's also a slight increase in your gross net NPAs as well, but the trend is on the upside. Which segment, according to you, is facing pressure?
See, vehicle finance is having a little bit of a pressure. You could see that in the continued NCL numbers and then the gross NPA. But I would say that compared to others in the industry, we have been doing, equally good or slightly better. And so we continue to focus on this, and it will come down in Q4, though it may not come down drastically as it would have happened in any of the pre-COVID years when Q4 used to be a good quarter. We will see a reduction, but it will be a moderate reduction rather than a significant reduction. We will see this bit of a stress or the higher NCLs and higher NPAs as we move into Q1 and Q2, and we expect it to mellow down in FY26, the later half of FY26.
All right, but Mr. Selvan, on the one of the points of worrying is the gap between the NPAs. Now, as per the RBI norms, and the gross stage 3 assets has witnessed a rise for the first time after 12 quarters. Help us understand, does this mean that we might see a rise in the NPAs going forward, at least for Q4 and Q1 of FY26?
See, actually, the difference between the gross NPA as per RBI and the stage 3 numbers, which is the 90 plus number, if it widens, I would rather say it is a good sign, because what it means is the 90 plus people are paying back and they are moving into earlier buckets, but they have not yet completely paid out all their dues, which makes them come out of the gross NPA definition as per RBI, the recent definition of RBI. But that is an indication that the customers are paying and rolling back their overdues, and they are moving into lower buckets, and progressively they will move into a zero NPA or a zero delinquency number, and thereby move out of the NPA definition as per RBI also. In the case of our customers, the repayment capacity of the customers are not very strong that they can pay off all their overdues in one go. So they will do it over 1 or 2 months or maybe even 3 months. So for them to move back progressively, and that is what we are witnessing. When we saw in Q3 some amount of rollback, but that rollback is not yet fully done to the extent of making them zero delinquent.
All right, with this, we let you go on that, Mr. Selvan. Thank you so much for taking the time out and speaking with us. But